Hey guys, it's that Dividend guy coming at you with a Robinhood portfolio update. Happy Friday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're going to go over the overall portfolio metrics, the buying power, the individual stocks, and how they're performing, and taking a look to see if there are any deals within my portfolio. Checking out the stocks that I'm looking at buying. And then, of course, comparing it to Berkshire, the actual Nasdaq, or the ETF that follows the Nasdaq, the Dow Jones Industrial, and the S&P. Taking a look at how my portfolio stacks up to all of those indexes. Generally, the S&P 500 is the benchmark, so that's the one that everybody's trying to beat, but of course, I'm not trying to beat the S&P simply because I don't have any tech. If I wanted to beat it, I would own Amazon, Facebook, Microsoft, and Apple. But our goal is cash flow, so if we even get close to any of these indexes, we're doing really well. Now jumping in, for today, we are down about $80, down 0.02%. For the week, we are down $374, down about 1%. For the month, we are down over $2,000, down 5%. 3-month mark, we're up $636, up 1.65%. For the year, we're up $7,600. So long term, we're still in the green, up 24% for the past year. And then all time, we're up $8,700, up almost 29% since April 13th of 2018. So the metric we're comparing is the 24.31%. We have a dividend. We had a dividend come in from Realty Income, which added to our passive income $28.26. They increased their dividend, so next month I'll get a better or a bigger payment, a better payout from Realty Income. So right now we have $75.73 of buying power. Take a look, see if there are any deals. So guys, something that I need to explain. So the amount that you see, say Realty Income is down, say $3 for today. It's more like 47 cents. So this is how much it was down since open today. That doesn't mean that's how far I'm down. I am actually up. See how today's return is negative, but overall we're up. So it doesn't calculate. This is the market return for today. It's not my overall return. So we have 120 shares of this awesome dividend aristocrat, $8,200 worth of market value. Average cost is $67.02. Around 21% of the portfolio is in Realty Income. Today we're down $420. Total we're up $160, up about 2% on Realty Income. It's at $68.36. Our average cost is $67. So even though it is down pretty significantly for the week, it's still not a buy for me, even at the lowest point of the week at $67.86. Still wasn't low enough for me to purchase it. Then we've got Coca-Cola, my personal favorite stock. We've got 65 shares, $3,500 worth of market value. Average cost is right around $55 a share. 9% of the portfolio is in Coca-Cola. Today we're down $36. Total we're up $14.88, and a dividend coming in on the 1st of October of $27.30. And then, of course, at around $55 a share, my average cost is still below the cost of Coca-Cola, very close. So this one I might actually purchase right now simply because it's close to my average cost, but until it hits that 56 cent mark, I'm not touching it. Then we got Altria, 175 shares, around $8,600 worth of market value. Average cost is right around right around $48 a share. Sorry, I'm going to be yawning. I woke up early this morning, so I'm tired. But $48 a share for our average cost. Around 22% of the portfolio is in Altria. Today we're up $28. Total we're nearly up $200, up 2.3%. Dividend coming in of $157.50 on October 12th. So at $48.95, we're really close to our average cost, but again, we need to drop a little bit more than $1 for me to purchase. Then we've got AbbVie. This one's been a high flyer and hasn't been bought for quite some time. I did just buy 15 shares because I wanted more AbbVie in my portfolio, but I'm not going to be doing that again simply because the average cost is so far up. above my the stock price is above my average cost. So 75 shares, $8,000 of market value. Average cost is $81.20. 21% of the portfolio is in AbbVie. Today we're down $23. Total we're up nearly $2,000, up 32, almost 33% on AbbVie. Then we've got Procter and Gamble. We've got one share, $145 of market value. Average cost is $144.84. 0.37% of the portfolio is in Procter and Gamble. Today we're up nearly 70 cents. Total we're up nearly $1. Then we've got Clorox. One share, $167.92, so right around $168 for market value. My average cost is $168.83. So right now I could cost on average on Clorox. 0.43% of the portfolio is in Clorox. Today we're up $1.31. Total we're down nearly $1. Then we've got Aflac at $54.30. 115 shares, $6,200 worth of market value. Average cost is right around $50 a share. 16% of the portfolio is in Aflac. Today we're down $30. Total we're up $545, up about 10 or 9.6% on Aflac. Then we've got Walgreens at $49.72. We've got 85 shares, $4,200 worth of market value. Average cost is $49.14. 10.8% of the portfolio is in Walgreens. Today we are down $19. Total we're up $49, up 1.18% on Walgreens to finish out the portfolio. So our metric was 24%. So that's what we're going to take down here and compare. I want Allstate around $131, and I want Travelers around $150. So we're close. We just need to wait a little bit, be patient, and I'll add these insurance companies. Ooh, Aflac is below the price that I want, so I could buy. Allstate is below the my original cost of $132 when I first bought the stock. So Allstate is a buy. Allstate's a buy for me right now, but Travelers is not. Comparing to Berkshire, we're behind about 2%, but they're a conglomerate company that uses float to buy businesses and acquire to buy marketable securities and to buy full businesses. So I don't expect to match Berkshire, but the fact that we're only down about 3% is pretty awesome. But they have a huge disadvantage compared to me because they are so big in size. Next, we've got the actual Nasdaq. I was told I was comparing to the company, but still it's up 40%. I'm up 24%, so I'm lagging quite considerably behind the Nasdaq. Then the Dow Jones, I usually am doing pretty well. Yeah, I match the Dow Jones most of the time. And then the S&P with the tech-heavy Apple, Microsoft, and other tech companies, 32%, so I'm lagging about 10% behind the S&P. So overall, we're not doing too bad, guys, matching the indexes that we usually do, and of course, Berkshire's a little bit ahead of us, but the S&P is way ahead of us. And I'm okay with that because keep in mind, this is not a capital appreciation. That's not what we're after. That's not what this portfolio is trying to accomplish. What it is trying to do is growing cash flow. So that's what we're after. We want to grow our cash flow every single month, and that's what we have been doing. So I'm really happy with that. I hope everybody is having a good day in the market. As you guys can see, short-term fluctuation doesn't bother me. I mean, if you look at it from a year ago, take a look. We're up almost $41,000, so we're down $2,000. So that's what my portfolio could be worth. I'm not worried about it. I treat this like a farm. I don't worry when the market says my stocks are, if Mr. Market tells me that my stocks are valued lower than my average cost, I'm going to buy more. If Mr. Market tells me that they're down but not down far enough, I'm just going to sit and hold. So that's where we're at. I honestly wouldn't care if my portfolio went down to like $20,000. Then I'd just be taking out credit lines and buying more. buying more of my companies. So keep in mind, guys, short-term fluctuation is the name of the game. It just gives us buying opportunities, nothing to worry about. With that being said, guys, thank you so much for watching. Remember to hit the like button on my channel. on the video, so it helps the YouTube algorithm to know that people like the content that I'm putting out. Also, make sure you hit the subscribe button. I've been doing dividend increase videos every single day, along with portfolio updates, and I do want to get a couple news videos out there as well, but I have like 3 or 4 more dividend increase videos, so there's been a lot of dividend increases, which is awesome for the channel. So, thank you guys so much for watching, and I'll see you guys on Monday with another Robinhood portfolio update. Take care.